following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-insightful, ever-exciting Options Insider Radio Network. And before we dive in, let me just tip my hat to all of you who showed up last week at the Options Insider Unusual Activity Forum. I had a chance to chat with many of you. You guys came in from all over the place. It was great to see that really, really motivated audience showing up. A lot of you guys saying you love the shows, you love the Option Block in particular. So I just wanted to acknowledge all of you here on the show. And thank you again for showing up. It was a great success, that first event. Looking forward to many more of those and other events in the near future over here at the Options Insider. So stay tuned to us and to the website for more information on what those upcoming events are going to be and where we're going to have them and what types of formats and what subject matter we're going to dive into. A lot of good stuff on the horizon. And speaking of a lot of good stuff, I am also joined today by the usual cast of characters for the Option Block All-Star panel. Starting off with the man beaming in from the great state of Maine, he is none other than the Rock Lobster, Senior Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show, sir.
I can't believe I keep getting this gold-plated envelope in the mail, inviting me to to participate as a host in the show every week. I'm still always honored and quite thrilled to be on the show.
It's like you win the Willy Wonka magic ticket every week.
It very much is like having a golden ticket every week.
I've got a golden ticket.
Do I like my job? I go, yeah, I got a golden ticket. I get a golden ticket every week.
Except we don't have any deranged little people running around singing awful, terrifying tunes.
The Oompa Loompas.
Trying to stuff me in that purple pipe.
We won't turn you into a big grape or a blueberry or whatever happens to that girl. Oh, that movie is horrifying on so many levels. All right. Speaking of horrifying on several levels, we are also joined by the man from the mountains, a.k.a. scenic St. Charles, Illinois. None other than Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, welcome back to the show, sir.
Always happy to be here. And when your birdies aren't moonlighting for me, I do have to confess I do go to the Oompa Loompa staffing agency to get some help from them.
At least my birdies don't sing little ditties while they're doing their jobs. So
that's true.
That's a
they're
plus.
all business. The Oompa Loompas, though, it's just a different jobs for different things.
You can't get those Oompa Loompas to shut up. They're really quite annoying. That's a whole other podcast in and of itself about Oompa Loompa labor relations. But we won't go down that rabbit hole right now. Instead, we'll add our final co-host to the program. You know him, you love him. He is the Viceroy from Options Express. Good old Alex Jacobson. Alex, welcome back to the show, sir.
Hey, Mark, good to be back. And let me add kudos to your outstanding crew for Wednesday's event. I don't think anybody has a sense of how hard it is to orchestrate and pull those things off. I think a lot of our listeners kind of think it just happens, and you had a great crew, and they did an outstanding job on Wednesday, and kudos to them.
That's true. I'm just a pretty face up front there. There's a lot of stuff going on behind the scenes. There's Gene and Debbie and Danielle and Mike and Kyle and a few others that I'm sure I'm forgetting, who all contributed in various ways, shapes, and forms to that, and will be helping me a lot on a lot of these future initiatives that we're working on. So a lot of exciting stuff unfolding here. And speaking of unfolding, it's time for the show proper to unfold and for us to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the program where we dive into what was trading, what was moving the markets, what was lighting up the old tape today. And it was a bit of a mixed day on the old street. Most of the major indices closing essentially unched or fractionally up or down on the day, but the S&P closing exactly unched on the day, and the Dow and NASDAQ closing down a little bit on the day, but really nothing to shake a stick at from today's activity for the most part. We saw a little bit of a rally towards the end of the day. It looked like we had a little bit more red on the screen until the last half an hour or so. We started to see some of that red get erased from the old screen today. We also saw, even though we saw the rally, well, not the rally, we saw these gains kind of held for the most part that we've achieved over the last couple of sessions. We did see that tick up in good old VIX cash, as I'd imagine a lot of people looking at these levels right now, Andrew, and saying, I'm not too certain. I don't know if we're holding these or not, and starting to scoop up some protection out there in S&P land. Is that what you're seeing as well?
A little bit. I mean, this was kind of, they marked the weekend back a little bit, and they actually took volatility lower than that today. So as I look at this now, I have the VIX cash up like 57 cents. They did, and at one point, the VIX was back below 13. So the weekend that came back into the options today, actually the vol did come down from that level. So, I mean, I would say on balance, just maybe a little bit, that this SIBO skew index popped a little bit. So, but more at the money stuff, not really, not much happened from that point of view. It was kind of a sort of a sideways one, I guess.
It is kind of funny how and when and why that weekend comes back. It's a bit of a capricious thing. Some days it comes in, some days it comes in late, some days it comes in not at all. It's a bit of an odd beast there.
Yeah, little textbooky today. I mean, we opened up 70 cents, like almost exactly the theta, like bang. And from there, the market volatility kind of just went south a little bit. So I found it very kind of vanilla. And I think I don't see vol coming in a whole bunch before the Fed, before not Greenspan, man, I'm dating myself 15 years ago.
Wow. Turn the Wayback Machine back to 1996.
On Tuesday, or the 22nd. So we got 2 days left.
Yes, dial us back all the way to the irrational exuberance era for Senior Greenspan to watch out for his briefcase. You never know what's in there.
Exactly, the briefcase alert. Aye.
But yeah, speaking of interesting hiccups going into the weekend, did you guys notice that little, I suppose you can call it blip, that little retread we saw in the S&P momentarily there on Friday? Another one of these little technical hiccups occurred towards the end of the session on Friday, where we saw, I believe the name, APC. We saw some crazy prints in that one. It dropped, I believe, all the way down to a couple cents, fractional cents there from, I believe, $40. Let me look at the chart here. Yeah, actually, no, it was trading $91 today. But we had some crazy prints there on the weekend, and APC being, of course, a component of the S&P that drove down SPX and OAX right down at the close. Of course, we since had NYSE bust the bulk of those trades, so the indices were back in whack for the most part. But it seems like this is pretty much the narrative we're going to be encountering a lot going forward. Everything is so electronic. Everything is so integrated across multiple exchanges, multiple platforms, and one little hiccup somewhere just seems to reverberate throughout the whole chain. And it's funny, I bring this up for a couple of reasons. One of them is that we see so many people flocking into these broad indices, and I'm just going to trade, the SPY ETF, or I'm just going to trade SPX or whatever, because then you're immune to a lot of these single name issues that come up when you're trading just an Apple or some of these other names that could have these crazy hiccups and these crazy wild rides. You seem to have diversified a lot of that risk away, and yet even in a lot of these broad indices, you can still have crazy hiccups and crazy prints out there. So you're not immune from your need to protect and be cognizant of what's going on out in these names. And granted, the one on Friday was busted. It wasn't a legitimate, there weren't legitimate trades, but these things could happen again in a heartbeat, and the trades could be legitimate. Could be another one of these down 60% type cutoff areas. So if you are trading the major indices, you certainly should be looking at some sort of protection going in there. Speaking of protection, we turn now to you, Senior Tusaw. I know protection is your coin of the realm over there at RCM. What caught your eye in today's activity?
Well, that shiny substance called gold, it started off down on the day and then it went up. I believe we actually had some news from, and this I haven't had a chance to look at too much of the news today, but it looks like there was some news over in the Middle East about some eruptions in some way, shape, or form with some terror. I don't know the full story yet, so I'm not able to comment on it, but nonetheless, we had a little bit of a rally in the gold and silver markets today. Started off down, but then during probably about 10:30, 11 o'clock in the morning, from what I remember of the day today, that's when we had a little bit of movement. And for the most part, other than that, I think I just took a nap today. There really wasn't much going on in the equity world for too often. Apple had a little bit of a rally today, nothing too much. That's pretty much it.
Are you still flying with the top off there from a GLD perspective, letting the just the put and the underlying no call to the upside?
I am for now, but one thing, I'm watching it fairly closely at this point just because of the fact that gold volatility is up. Granted, the gold volatility index, GVZ, looking at that's down almost 6% on the day today. But nonetheless, if we continue to rally like this, I'll have to reset the collar on some things. And right now, I don't think I have any upside caps on anything right now.
And Andrew, aside from this weekend rushing back in, what else caught your eye in today's activity?
Some of the funny, we've been looking at this Tesla and CS City. Maybe some interesting premium selling in both of those stocks actually the last couple of days as some of the Elon Musk effect comes off. There's got to be a joke there somewhere if Mark was here. Isn't Musk some kind of, perfume?
I think you have a man crush on this Elon Musk fellow. You've mentioned him like in 4 consecutive shows now, I believe.
Well, he's the real life Iron Man. Did you know that?
Well, he was in the movie. I don't know if he's actually made a suit of armor.
Anyway, the guy obviously hugely successful. He has 2 companies that have massive, massive short interest in them, both SCTY and Tesla. And the Tesla implied vol is coming in a little bit, and the SCTY Solar City. Funny enough, both companies. What happened? Goldman ran the secondary for Tesla, and I believe Goldman is making an investment, buying something that has to do with Solar City, making a pretty good size cash investment in those power, basically the solar power grids or whatever they do there. So it's funny how that seems to be a good relationship for both right now. But the vol in both stocks came in today, which of course we're always watching the volatility and how much of that short squeeze will come off in those 2 stocks. But for Tesla, it looks like it softened a little today. Solar City, not so much. It was up another like $6 or $7 or something like that at one point. So whoever started shorting it at 18, they're not happy right now in the mid 50s. So those are the kind of the fun ones that we're watching this week.
No, Tesla certainly came back to bite a lot of people. Go ahead there, Alex.
One of the most active names here today was First Solar. That was something that kept Grigas busy all day. In fact, one of the things I did last week is I talked a little bit about our trading patterns tool, which focuses on most actives. And First Solar was the 6th most active issue here at OX today. I'm talking about the stock. So we saw a lot of activity in that, and that popped about 10%. So it grew. The group looks like it's getting a little love here on this nice warm day when solar should get a little love.
Well, unfortunately, in the category of not getting any love, let's look back at these Jumbo SPY options. They're really not exactly lighting up the tape at all. We touched on them last show, and since then I've looked into some of the numbers. I haven't had a chance to get the most recent for today, but I know into the middle of last week, I think they had done a whopping 18 or so contracts, really not lighting up the tape at all for a variety of reasons. No one lists them. No one's pointing to them. It's a crazy boondoggle. NYSE came out recently and said they're not going to list them for a variety of reasons. Alex, have you guys made any progress on that front? Or maybe before we even get there, have you received any interest from OX customers on, hey, are you guys going to list this, or is it kind of just flying under the radar?
It's not under the radar. We have had some interest, and I think we're part or caught in this kind of industry wait and see. As I said last week, I'm not even sure we're members of Box. So the only way we could hit them would be via linkage. And I think that's one of the challenges here. And I think, I don't want to say you're seeing organized indifference to them, but I think you're seeing organized indifference to them. And, it's very easy for everybody to say, look, if they really take off, we'll trade them, but they're not going to take off if no brokerage firm is connected. And I think a lot of the industry is not connected to Box. And that's a challenge. I made the comment on Thursday's show that it might be systemic, that people aren't going to list it intentionally because then it would be available through linkage. I hope that's not the case. But so far, as you pointed out, Mark, NYSE ARCA has said they're not going to list it. ISE has said they're not going to list it. ISE, who fought vigorously to bring their maxi, is now stepping away, and everybody says, well, it's going to fragment the spider, and I think some of this is the politics of the industry and the exchange community, and I hope that does not continue to be an obstacle. I'd like to see these things list, and I'd like to see competition, as we all would. It would bring trading costs down, which would benefit everybody. Because no matter what you pay to trade, if you're paying a per contract, if you're paying fees, if you're paying a blended rate, SPX is 13% of the volume that's done every day, and it is the most expensive thing to trade. So in a sense, everybody pays for that in their rates, and little competition would be welcome.
I was talking to some other firms last week, and I heard that Apex, who clears a lot of these smaller options brokerage firms in this space, is not even going to process or accept that Jumbo SPY contract. So that pretty much prohibits many of the smaller brokerage firms in this space from even listing this thing. So if they can't list it, then the customers can't obviously get it. So that's a huge impediment to these products. Yeah, a surprising number of obstacles and roadblocks being thrown in the path of this product, which it seemed not that long ago everyone was so excited to have, everyone was so excited to get, everyone wanted some sort of alternative to SPX, and now it comes along, and for all the reasons we described, and probably a few more, literally no one almost, is jumping at these products. So it's kind of interesting to see this unfold. Hopefully this doesn't spell the end of these contracts. Hopefully it's just a feeling out period, and they're going to get a little bit more interest going forward. But still, just very, very bizarre stuff going on out there. So if you're one of the ones who's been writing into us saying, hey, I'd love a Jumbo SPY contract, well, go ahead, call your broker, make some noise and say, hey, give me some way to trade this thing, because you could be pretty much the bulk of the open interest, it sounds like, from what's going on out in this. You do a 10 lot, well, you're lighting up the tape.
Don't you think, guys, that part of the appeal of the SPX, granted you want some made to be listed somewhere else, but the fact that you could still get audible quotes. You can still go down to a pit. I mean, a lot of the stuff that's quoted in the SPX is just setting SKUs and looking for pricing and, trying to glean market information, which, if you list another jumbo contract, you can't get kind of the custom request for quote stuff on those systems yet. So, I mean, well, fine, you're going to add competition, but is it adding any value to the system? Just to have another, pseudo contract, yet you can't get the kind of quoting you want if you're an institution anyway.
That's true. I used to hate those guys who'd call up just to set their SKUs off us. I would say, well, I'm not here to be your monkey. But they would call up, they would quote something, you give them your market, they come back mid-market and hang up because they didn't want to trade it anyway. So if that's the case, if that paper isn't trading it, maybe it's not the end of the world. But you're right, there is a function that the pit performs that is outside of the just executing contracts. There's price discovery and everything else, and being able to feel out what's going on in the marketplace through that pit. And you're right, you don't get that in the Jumbo SPY, but you could still do all that in the SPX and then execute it in the Jumbo SPY if you wanted. I don't think anything's stopping you from doing that. So you could still take advantage of what exists in one place and then trade somewhere else if it was more favorable to you.
But then they're going to have to post that Jumbo SPY volume, which is, it's always interesting to me to see what those quotes actually look like when they post. That's what I would say as far as, okay, well, what kind of Jumbo SPY volume are you going to see? So I think it's a lot easier said than done to, have that kind of a large, highly leveraged product like that and think you're going to get really liquid markets. I don't know. So I'm skeptical.
Here's the contra argument. SPX is liquid. It's transparent because there's an auction now, and even that's recent. But it costs anywhere from 45 to 70 cents for a member firm to trade. Look at Spider, where just look at the underlying trust. There's 130 billion notional in the underlying trust, and I haven't counted one contract of open interest. And to the brokerage community, Spider either trades for low cost or up to a 30-cent-ish rebate. So which would you rather have, and would the liquidity develop? And if people are creating institutional obstacles to getting to it, that's problematic, because we built this marketplace on transparent and open markets. And if people are intentionally obscuring the transparency or openness, then something's wrong. And as I said before, it's also a violation of the exchange consent decree. And I hope that's not the case. But if I were a box lawyer and I thought that was the case, I'd be in Washington claiming competitive blockage issues.
Yeah, of course, we had Ed Boyle, the guy who's kind of the mastermind behind this product from Box over on our show at the OIC conference just a few weeks ago. But so much has happened in the interim. It might be worthwhile bringing him on again to look back at some of these issues and see why he thinks these things are encountering so much controversy, because it certainly is fertile ground to discuss. But right now, we have to keep on rolling right on with the show into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the old Odd Block. This is, of course, the portion of the program where we don our fedoras and get into some of the seedy business of the options market. And we're going to kick things off with an Odd Block special. Not a biotech, but it's priced around that same level. This is Navios Maritime Holdings, closed today at a whopping $5.01. This is a name that a vertically integrated seaborne shipping and logistics company. So there you go. They do dry bulk commodities. Very scintillating stuff. I know I always grew up. When I grew up, I wanted to be into the shipping and logistics of dry bulk commodities. That excites everyone's imagination, I think. And today, this is the name that usually does a whopping 350 contracts a day, doing almost 7,000, 6,700 today. The bulk of those come in a big print on the June 5s. We saw a chunk going up for a 3,300 about to be precise, going up for prices in the 21 to 40 cent range, and we had a total of nearly 3,600 going up on the day today. So a lot of paper printing here on these June 5s, as well as some paper well off in December. Maybe somebody's deciding to roll a wee bit out in the D's 5s and 7/2, 1,300 and 1,000, going up respectively in those strikes as well. But what in particular caught your eye about this activity today, Andrew?
Just the fact that I felt like the buyer looked steady as I looked up through the time and sales on this. It felt like they were buyer early and they posted a bid and they tried to get filled. And there was a 30 bid at the end of the day for them. So it just felt like there was a buyer that was not quite getting filled. So it was like kind of a one-way buyer and then sort of lots of scattered sales. And so, earnings are coming out. I think all these dry bulk shippers are at the bottom, and this is one of the few dry bulk shippers at a 52-week high or close to a 52-week high. So, it looked like it could be very bullish paper. You're right. The December was trading. I didn't really see anything go up a spread, but that doesn't mean it didn't trade that way. So at the money straddle is 60 cents on a $5 stock. I think that's, at least noteworthy for this little company. Clearly, they're thinking move here. You're paying 60 cents for a straddle. Earnings are, tomorrow pre-open, so they're looking for move. So I think the paper's looking for maybe upside move.
You mentioned the spread tag. We hit on those condition labels, those spread execution labels, quite a bit at our event last week, and how essentially unreliable they are in most scenarios, and how they are very much a legacy from the old days, and they're only allowed one letter of a code, and it's such a regimented and essentially, for the most part, useless system. So if you're interested in that, listeners, check out what we hit on that when we post all of the webinar and video content from the event last week, coming probably in the next couple of weeks. But yeah, it was a very interesting topic of discussion. Speaking of topics of discussion, we're going to keep on rolling here in the old odd block out into the next one. This is Foster Wheeler Ltd, ticker symbol FWLT. They closed today at $23.53, up a whopping 9% or nearly $2 on the day. And not surprisingly, given this upside move here in good old Foster Wheeler, of course, this is the name that does about 1,000 contracts a day, doing about 24,000 today. And not surprisingly, a lot of that was focused on some upside calls, because that's what everybody loves, particularly on days like this when the stock gaps up 9%. We saw, in particular, some fairly sized blocks going up on these July 25s, with about 7,000 going up total on the day, and a block of nearly 3,000 going up for 39 cents. All of this on a very paltry, as in zero, open interest. So this is all new opening paper here on these July calls in Foster Wheeler. This is, of course, a global engineering and construction group. Another scintillating one. But yeah, calls, again, the narrative here in Foster Wheeler, Andrew.
They were the narrative. It looks like they bought them early. And for 39 cents, by the end of the day, they're trading 80. So not a bad buy, it looks like.
Yeah, there are worse trades that I've seen here on the old odd block.
Yeah, I looked at the paper looked like they were just lifting the offer early, and they got more expensive as the day went on. It's weird because they look like they went out of sequence. By the time they printed, they were already trading a lot higher, so they looked like a little funk in there somehow. That initial print was probably hard to put up, but nonetheless, it did hit the tape. So, and there was call buying ever since. Fancy that.
I don't see what the driving force was behind this. Maybe there are these guys in play. They don't have earnings right now.
I couldn't find it either. But doesn't mean it doesn't exist somewhere.
Yeah.
There's no earnings. The
definition of odd here. Some mysterious pop here in Foster Wheeler, coinciding with some very interesting and some pretty sizable. This alone on this strike, July strike, is about 7x the ADV out here for Foster Wheeler, going up on these call buying on these July 25. So someone's saying, we like this rally, we like it a lot more going out to July. It's a giant move
for this stock too. It's a 14 volatility stock. So
this thing was trading 19 just about a month ago, so it's already had a substantial rally, and then a lot of that coming today, of course. Of course, it was trading back in January. It was trading about 27, so it has come off from its highs. And I guess people thinking that whatever caused it to get clipped, looked like back in February, early March, it got clipped due to earnings. Whatever caused that apparently has been worked out, because this thing
maybe they're going to rebuild Syria now that Lebanon is.
There we go.
The Hezbollah is getting into the act to save their Syrian brothers. Who knows?
So there you go. All the turmoil in the Middle East is a boon for good old FWLT. All right, and we're going to wrap things up in the old odd block today with some more calls, completing our narrative of the day. This time they're going up in Big Lots Inc., ticker symbol BIG, B-I-G, closing today up about $1 to $38.24. This is the name that does a whopping 1,000 contracts a day or so, doing nearly 6,000 today, with a lot of that coming in the June 37 halves, going up for about $2.10, over about 2,300 times in some sizable blocks here. The average trade size or so in those blocks, about 1,200 contracts. Open interest, only 700, so this is all open in paper. And they were lifting offers the whole way, which always catches our eye here on the old odd block, right, Andrew?
That's again, that was kind of the theme today. It was something we haven't seen since, I keep telling our traders at Option Pit, since 2007. People buying calls and lifting the offer. I mean, that's pretty bull marketish. I'm sure Tucson could give us a strategy block on that, but you just don't see that kind of stuff. We haven't seen it in the choppy markets that had relatively high volatility. Now I got lower vol, and calls are a lot cheaper, and they look like a better, a good replacement for stock. Alan, when Alex always talks about that, when things get cheap enough, the theta is not so bad anymore, and you get a lot more leverage. So Big Lots, another thing, vol is up in here. Earnings are the 30th, so this looks kind of early for. I expect to see some earnings pump here, but I mean, the at the money straddles 380 now, something like that. So, I guess they're just buying it up. The retailers have been doing okay, and maybe, they think Big Lots is going to go the way of all the rest of the retailers, pretty much.
Yeah, if you see someone coming in a position ahead of earnings and looking to get that, that free gamma we've been talking about a lot here on the show, going into earnings and then dumping ahead of earnings, you typically don't see them lifting offers and chasing it like this. This guy obviously wanted to get in. If he was just looking to get some free gamma, he probably would have been a little bit more nuanced in how he got these contracts off. So he clearly wanted to open up here in these June 37 halves and wasn't too concerned about how he did it. He's like, get me done.
That's kind of what it felt like. I want to own them.
Yeah, I want in on Big Lots. Get me done, and then get me the confirmation. So yeah, Big Lots, an interesting one. A little bit pricey for us to close out the old odd block on, but c'est la vie. No $3 biotech for you today, dear listeners.
It's a real stock.
Yes, it's a legit one. They actually have buildings, but
and they make money.
Yeah, they do. You're right. They sell a lot of those Big Lots. So there you go. But yes, that's going to do it for the old odd block, and now we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express
Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the program where good old Alex takes the reins and I get to take a bit of a rest. And even though my voice is back, a little bit of a hiatus for my voice will do wonders. So, Mr. Alex, what in particular caught your eye and what's cooking over there in the land of OX behind the scenes?
So one thing I talked about last Thursday is the trading patterns tool here at OX. And what I got on Friday was a batch of emails from folks who, I don't know what time the show went up, but I was working off site on Friday. And Friday and Saturday, I had a bunch of emails from people who wanted to know how I had known in advance that oil was going to go down on Friday, and obviously I didn't. But the cool thing about the trading patterns tool is it showcases where the activity was here at Options Express. So I thought I would take a minute or two and talk about what was lighting up the tape in trading patterns today and give people a sense of what's going on in the electronic marketplace. And of course, generally, the two most active issues are the spiders and Apple here at OX. But what's cool now is I have this electronic tool that I can see what else people who were trading the spider and people who were trading Apple were trading. And the 6 of the most active options here today, not surprisingly, were weekly options on gold and Tesla. So I kind of opened up the Pandora's box last Friday. I'm going to leave the Pandora's box open. Gold, the 135 call and the 137 call. These are week 4, so these are Friday expirations. And everybody keep in mind that this is a funky weekend because Monday is Labor Day. But we were trading more calls on gold and puts. As I say, 135 calls, 137 calls. Third place was the 133 put. In Tesla, the 2 most actives were also calls. Nope, read that wrong. The most active was the 85 put, then the 100 call, then the 90 put. But the most active spot products traded here today were the Spider, and surprisingly, maybe not so much to people we've talked about this, but the futures business is becoming a very, very large business in the e-commerce space here. The E-mini Junes were active. Third most active was Tesla, then June Crude. Number 4 most active on the list here, followed by Apple and First Solar. So if you're an OX customer, or you're a Street Smart Pro customer at Schwab, you get access to all the tools. One thing I would begin looking at is the trading patterns tool, which is right up in the toolbox. And ironically, on Thursday's show, Friday's opening, it was spot on. Our customers were essentially selling gold via the puts, but it's a cool tool to get the sentiment. And on future shows, I'll showcase 1 or 2 of the most active trades. That was lighting up the tape here. Little bit of price line today, only about a $30 move. And as always, Apple today about a $10 rally. That was active here today as well.
And if they want to find that new tool, Alex, how do they go about doing that?
If you're an OX customer or you're on the Schwab Street Smart platform, there's a tongue twister. Log into your account, go to the toolbar, and when you hit the toolbar, you'll see a drop down. The number 1 choice in the toolbar is the Idea Hub. Shameless plug on my part. The number 2 choice is trading patterns, and you can look at the activity of the firm, but you can also search, let's say, for example, you were trading solar stocks today, you were trading First Solar. You can type in First Solar, and it'll show you what was most active by the folks trading First Solar in both the spot market, but you can also look at the most popular option strategies on that. So it's a cool tool, the trading patterns, and it's right up in the toolbar of the Options Express platform, which you can hit from the Street Smart platform if you're a Schwab customer.
That is pretty cool. That's leveraging that old Amazon recommendation engine and saying others who bought this movie like this movie and things like that. So others who blasted out the Tesla 85 puts loved also to sell these puts. So interesting stuff.
In the early days of the options market, when Marty Zawad created the put call, I'm doing this old guy story again, everybody looked at option statistics and took the contrarian view. And one thing that's evolved over time, especially since 2000, with the real start of the option-centric firms, the firms like Options Express that were built around an options platform, is a lot of people now look at the paper as more of a genuine indicator as opposed to being a contrary indicator. And of course, on Friday, we were spot on. Time will tell if that was luck or just, kind of one good call. But it's cool to see the tool, and it's cool to be able to look at that information and harvest the sort of sentiment that's there and put it in your day-to-day trading decisions.
All right, listeners, if you're an OX customer, log in and check that out. Yet another cool tool coming to you via the Viceroy over there at Options Express. A lot of good stuff cooking over there in OX land. You've had Walk Limit, you've had Idea Hub, now this. Since you've been on the show, Alex, you've been bringing quite a few goodies for the OX customers, so I'm sure they get excited whenever they tune into your segment. But now it's time to keep on rolling right on into your segment, dear listener. That is, of course, the old mailbag.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, and welcome to the mailbag. We've got a couple of great questions coming in from you guys this week. The first one actually comes in from a listener who goes by the handle Dougie L. He writes, why all the fuss with Jumbo SPX? Why won't others trade it? Well, we hit on that a little bit at the top of the show, Dougie, but there's a lot of reasons we've hit on. I encourage you, like I said, listen to the top of the show if you have additional questions about that. But for the most part, it seems like they don't want to link away, so they don't want to send volume away. A lot of them can't link to Box, so that's an issue, Box being a much smaller exchange. Also, a lot of the people are playing the wait-and-see game. People like Apex Clearing and others who clear for a lot of these second-tier brokerage firms are refusing to list this. A lot of the market makers are refusing to play out there. So all the reasons we really listed, Andrew mentioned the fact that people like color in these products, and they call up quite often and generate some interest by getting that color, and they can't do that out here in the Jumbo SPY. So there's a lot of reasons, some of them pretty petty, some of them perhaps more legitimate, that seem to be jumping in front of these Jumbo SPY contracts. We'll keep an eye on this. Hopefully this will sort out. And like I said, maybe I'll reach out to Box again and bring them back on the show so we can discuss in a little bit more detail exactly what's going on and why people are stepping in front of these contracts and keeping them from taking off, because it sounds like on the surface this is what everyone has wanted for quite some time. Next up, we have a question from Montevecchio. That's a good one. He says, I'm starting to learn about time spreads. Can you guys explain roll risk and how it can impact me? Andrew, I know you guys over at Option Pit love your time spread. So why don't you do a quick rundown on roll risk for our friend Montevecchio and how it could impact him in his time spreading career?
Well, we love time spreads under the right circumstances. I'll just say that. But as far as rolling, you're long a back month and then you're short a front month against it. So you have to be mindful of what you're basically selling gamma in the front month. So what is going to be your resulting position after your front month expires? So to me, you either make a decision with time spreads, okay, I want to own this particular back month call. Let's say you want to get long the stock, and I'm going to just sell out of the money calls against it. And you're kind of making that decision that you're going to keep this back month call and kind of create a sort of a continuing position for yourself. Another type of time spread is just basically waiting for the front month to wither away, and then you just close the position once the front month option has disappeared enough against your back month option. So I think trading time spreads, those are really your two choices. So your choice is like, do I roll? do I put a position on that I am planning on rolling like we do in the VXX a lot, where we like to buy an out of the money put and we sell puts in front of it to let the VXX roll down to our strike, or you could buy out of the money calls and you could sell out of the money calls against it as, let's say, your underlying moves up to the strike, and you kind of just keep these positions on. Granted that you don't have extreme underlying movement, basically going in the opposite direction. So that's what I would say about the whole concept of roll risk, unless there's some sort of roll risk. I don't even mean about index roll risk or future roll risk or some of the other stuff.
Yeah, I was thinking he was leaning towards maybe the future roll risk. So maybe we'll say that for another show because we are running along. But really quick, we can just say that that of course there are names like SPX that are hedged with underlyings like futures that have an expiration date attached to them as well. So that adds a whole other level of complexity into the scenario. The fact that underlying then expires into cash, not into some legitimate deltas that you could use to hedge, adds another layer of complexity.
Problem, like
yes.
In the OEX, when they early exercise people, all of a sudden your hedge is gone. That would be the other one.
Yeah, that's a rude awakening.
you had zero deltas, and now you have a lot of deltas. So that could be another roll risk where you weren't planning on losing the other side of your time spread, and with future settle options, that part will go. You're going to get cash, and you get no underlying. So now you have a delta directional risk you might not have thought of, basically that morning.
Yeah, I don't think a lot of equity options traders really appreciate that concept of the underlying going away to cash, and how that could really impact you in an adverse scenario. So there are a lot of facets to roll risk here, Mr. Montevecchio. Great question. Maybe we'll dive into it more at length on a future show, but I think we hit all the salient points. Good luck with your time spreading. If you want to learn more, of course, read our site. Contact the guys over at Option Pit if you want some good hand-holding on time spreading. They'll walk you through the whole thing. A lot of you writing in, too, questions about this Bitcoin thing. Is getting a lot of attention these days. Not really an options question. Plus, we're running low on time right now, so maybe we'll save it for a future show. But an interesting topic, perhaps, for discussion. We've been talking about currencies a lot lately. This certainly falls into that realm, if perhaps a dubious end of it. So maybe we'll table that for another
what's
time.
What's interesting is, I'll say about Bitcoin, besides Cyprus, when the value of those Bitcoins blew up and stuff, is, the government is officially not liking this business. There's lots of subpoenas and things like that. So, you've got to be careful about businesses that the federal government is taking an active interest in not liking.
Yeah, when you're competing against them.
Big beast to beat against.
Yeah, it's true. There's other risks aside from roll risk, and governmental risk is certainly one of them. Of course, any business that's founded with the Winklevoss twins or whatever, you have to be curious as well. All right, so
were they the Bitcoin guys?
No, they didn't found it, but I think they've been big investors in it. And they've been gobbling it up. They're trying to be the Hunt brothers of the Bitcoins, and I don't know how well that's going. Of course, recent rates seem to be doing all right. So, of course, who knows how liquid these things actually are. But again, another topic for another day. We have to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our radar for the coming week. And right at the top, we should mention, of course, Alex hit on it earlier. It is indeed a holiday week, so you have to watch out for those little theta gremlins to come not nibbling away at your portfolio towards the end of the week. Of course, the flip side of that coin is you can probably score some decent deals towards the end of the week if you're a pretty savvy premium buyer on late Thursday into Friday. So keep your powder dry and watch for some of those names to be overly sold going into the weekend. And maybe you pick up some free weekend protection at the very least. Mr. Andrew, what's catching your eye for the week ahead here?
Like I say, we're looking at, we're starting to look at these solar stocks again. There's a lot of movement in them. So this Solar City seems like it's money is coming back into, it's kind of frothy stuff. First Solar, always looking at again, which could, if there was ever a growth value attached to it, it could be, a $100 stock again. Because right now it trades at a fairly low multiple. So, stocks like that, looking at Apple, watching the volatility move around in there, as in it's been kind of hanging in this very low area. So, and we've seen some interest back in it again. So, mostly stuff like that. Finally, for the week, I'm interested in what happens to the Treasury bonds after Bernanke's testimony. Is this, they always have to kind of baby step this news out. So I'll be curious to see what they say going forward on all this. Is this going to be where they stop buying all the bonds? So we'll see. Could be very interesting there.
And what is coming up in the land of the pit?
The land of the pit, the 22nd, we have Why Take the Gold course. So basically helping educate people on how options work, how volatility works, and how you can create positions to do stuff, to quote myself and Mike and you and everybody else. That'll be, I believe, Thursday afternoon. Go to optionpit.com/events.
All right, and Mr. Tusaw, what is catching your eye? What are you watching for the rest of this week, sir?
Russell 2000 hitting 1,000. Today, the RUT did go over the 1,000 mark, and I like looking at key numbers, and we couldn't quite stay above it. So the main thing that I'm telling everyone is the same thing I remember my grandpa used to tell me when I was a kid, whenever I would get up too high climbing a tree or doing something that he thought was a little bit dangerous. I'm just going to spread the message to people. Be careful. And that's it.
Just a little happy word of warning from Uncle Mike to all of you out there.
Yes.
All right. Thank you for that, Uncle Mike. And last but certainly not least, Mr. Alex, what is catching your eye for the rest of this week, sir?
As Andrew mentioned, looking at the 10-year, back up around 2%. I think that's remarkably bullish for the market, especially in this modest volatility environment. So hope to see the 10-year take out the 2 handle. I think that powers us a lot higher. A couple earnings this week. Hewlett Packard and Lowe's on Wednesday. I think it's pretty clear that the expectations out of the Home Depots and the Lowe's are pretty good. So any disappointment could be a shock to the market. And Hewlett Packard is clearly a kind of out of the left field in earnings numbers company now. So keeping an eye on those. I think it's going to be a quiet week with the Monday holiday. But every week's an expiration now. I'm a happy camper.
And of course, with all this Jumbo SPY lighting up the tape, Alex, you're busier than ever.
Yeah, well, I would like to be busy with that product because, candidly, that's an issue of profitability. So, I personally would like to see that product get traction.
Yeah, I think we all would. It's an interesting product, and it certainly fills a need that a lot of people have felt, needed to be filled over the past few years here in the space, and yet now it comes along. And a resounding shrug, it seems like, if not perhaps more insidious intent behind that shrug over there in the rest of the option space.
Yeah, I think people need to understand that shrug is not without color.
There we go. Shrug color. I like it. I think with that note, we shall leave you for this week, dear listeners. Actually, not for this week, just for today's episode. We'll be back on Thursday for another episode of the Option Block. And of course, on behalf of Mike and Andrew and Alex and myself, we want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And we'll see you on Thursday right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.